All right, so learning objective 4 and 5, I'm going to put them together because they're both too small to actually put in a single video. Okay, so objective 4, we're going to do this unadjusted trial balance. Remember the 4 steps I told you? Step 1 to make journal entries, step 2 to post those entries to the ledger. Step 3 was to make a trial balance, which is not a financial statement, and then prepare the 4 financial statements. Okay. So here is the trial balance for this company. So on the trial balance, all we're going to have is the account and the amount that was in the bottom total when we totaled it up. Okay. So we can come up here and we know our cash had a balance of 12,200. It didn't matter which one of these ways we did it. It still is that 12,200. Okay. So a trial balance is every single account, every account with their balance. Okay. And it has to be in order. Okay. So you'll notice these are assets right here. We could draw a line between furniture and accounts payable. And then right here, accounts payable, utilities payable, unearned revenue, and notes payable. Those are all liabilities. And then we have our owner's equity accounts. And then we have service revenue. And then we have all of our expenses. Okay. If you draw an imaginary line between revenues and withdrawals, everything below here is on the income statement. Everything above that goes to the balance sheet. Okay. But this is not a financial statement. Okay. We use this trial balance to prepare the financial statements. Okay. And we have to do them in order. Remember in the previous chapter, we went through all of those and I showed you how you have to do them in order. Okay. So the very first one they're going to do is the income statement. I'm going to mark this out just because so you're not distracted by it. We had service revenue of 16,500. If we come up here, you see 16,500. We had rent expense of 2,000, salary expense and utilities expense. So we totaled those expenses up and we end up with net income. Sorry about that. Okay. So we end up with net income there. Sometimes when I shrink it, it'll move one of those, it'll move the slide out of the spot. Okay. That's the first one. Has to be dated, has the name of the company, name of the statement, and has to be dated 2 months ended December 31st, 2025. Okay. Those statement of owner's equity is going to be dated exact same way as the income statement. Okay. We have a beginning balance in Sheena Bright's capital account because this was a new business. Okay. Brand new business. So that started with zero. Okay. The owner put $18,000, I'm sorry, $48,000 into the business. Then the net income got added. The net income came from right here. And then the owner took money out, and that left a balance in the capital account of 53,800. Okay. We're not doing the statement of cash flows, so we're doing the balance sheet, and we have all our assets over here. We just listed all their accounts and the amount and totaled them up. We're going to do our liabilities and owner's equity. Remember that owner's equity number doesn't, we're not going to go back up here and grab this number, okay? Because we adjusted owner's equity for net income and the withdrawals. So that 53,800 gets brought down here into the balance sheet. And we are balanced. Yay. Okay. The trial balance has to balance right here. Even if it's balanced, you still could have debit or credited the wrong account. These two accounts being the same, all that means is your debits equal your credits. It does not tell you that you got everything right. It's a good start. but it could be wrong. Okay. So I kind of gave you the steps in the accounting cycle. Um, Sometimes I like to simplify things just a little bit, but the process of which a companies produce their financial statements for a specific period. Okay. And these steps are exactly what I wrote out for you. Okay. We do start with a beginning balance. We analyze transactions, put them in the journals, then we're going to post them and then prepare the trial balance, then the financial statements. Okay. What I did was exactly the same as this. Their steps are just a little different. You're not going to get a test question that's going to contradict either one of those. Okay. So don't stress too much on that. All right. We are not doing the last objective. The last objective is over ratio analysis. We have a whole chapter on that. We will talk about that in Principles of Accounting 2. And that is all for chapter 2. Good luck, and I'll see you in chapter 3.